Hello traders, today I want to show you how to find good trades with using moving averages. As level 1, I just want to use one moving average to show you how simple it is to analyze the chart and find a good trade. As you know, we are talking about the fractal trading here, and we look at the price chart as a fractal. So fractals are self-repeating geometrical shapes that no matter how much you zoom in or no matter how much you zoom out, you see the same thing. That's how I look at the chart, and I hope you learn how to look at the chart from now on like this. So the first thing that we want to do, remember, before you add any indicator, the foundation is price action. Price action is the foundation of any system. No matter what you do, no matter what type of indicator you have, you must know price action. So that's what we want to do. So to analyze the chart in a price action, and especially in a fractal way, we need to know that where the trend begins and where it ends, or is it ended or not, still going on. So if you look at this chart, this is a 4-hour chart of gold versus US dollars. And as you can see, we have some uptrend. The first thing I do, I normally find the beginning of the current trend, which is down here, and I put a line so I know that this is the beginning, and before that is, as you can see, there's another downtrend. So market just the bottom down and it's going up since then. The second thing I do, I determine the highs and lows. So what you want to do, if you watch my previous videos, I said that every trader has a different look at the chart and at the market. Some people are very detail oriented, so they see lots of highs and lows. Some people are just they look at the like a bird's eye view of the market and they see the major highs and lows. So you have to find out which type of trader you are. If you just look at the big ones, if you look at the small ones, I'm kind of a mix of both. In the higher time frames, I look at the big ones, and as I go down, as I get closer to the end of the market, which I'm gonna take the trade, I look at the smaller and smaller time frame. That's how a smaller and smaller highs and lows. That's how I am. But it's up to you. You have to analyze the charts for at least for a couple of months to figure out which type of trader you are. So what I do, I just put the highs and lows like dots. So I connect these dots, and then you can see the whole waves of the price. It's easier to connect them and analyze them. And the last leg, which is still going on, so we don't know where it's gonna end. You connect these with the trend lines, the first one to the second one, and it goes on like that. But because the price is still breaking this trend line, we connect the second one. As you can see, the current time at the market is on this trend line, and probably it's gonna break or it's gonna bounce back up, so we know where it's going. Okay, the next thing we're gonna do, we're gonna draw some support and resistance line, and actually some of the connecting some highs to the lows and some lows to the highs. Okay, we're gonna connect some highs and lows together like this from the previous trend, and we're gonna draw some horizontal support and resistance lines. Like we have one down here, another one up there. These are the major ones, and then probably from the previous trend you can connect these. There are too many lines, so we don't need them, probably not this one. Okay, that's all we need in the higher time frame as a price action. Now I'm gonna add one single moving average, and I go with the higher one, I don't know, 50, which everyone uses, and I go with the exponential. Let's go with the close is good. Let's change the color to something darker, green. But that's the moving average that we have. So there are two ways with the single moving average. Okay, remember, this is the level 1. There are more complicated strategies and ways of analyzing the chart with moving average, but this is just one moving average. So we put a law, like a rule, something like every time price breaks the moving average, or every time touches the moving average, or the first pullback, or something. You know, you determine which one you like. I like when the price breaks the moving average, like here, down there, and then it comes back up and touches the moving average. That's what I like. That's like a pullback, you know. This pullback is very important for me. I like it. Maybe you're different. So every time the price breaks through this moving average, comes back up, at this point that the price touches the moving average, we are in a fractal trading, right? We take this point to the lower time frame. And if you've watched my previous videos, you know that the lower time frame is 10 to 20 times shorter than the current time frame that you have. So if you're in a 4-hour chart, which we are now, 10 to 20 times lower is not 1 hour because it's 1/4. It's not 30 minutes because it's 1/8. It's not 1 minute because it's 1/24. It's not 5 minutes. So in MetaTrader 4, the only time frame that you have is 15 minutes. So 15 minutes falls about 1/16 of the 4-hour chart, which is between 10 to 20 times. That's what I do. Okay, you can determine the way that you trade. That I'm showing you how I do it. So in the 4-hour chart, the price breaks through the moving average downward, comes back up, touches the moving average. At this big red candle here, I take this point to the lower time frame. So whenever this happens, at the moment markets just dropped, but whenever this happened, I take this time to the lower time frame. And remember, the price broke the moving average downward, so I'm looking to sell the market because we're in a downtrend at the moment, though the whole trend is uptrend. But at the moment the price broke the moving average downward, so when it comes back up, touches the moving average, I'm gonna go to the lower time frame to find the good entry point as a sell. So I go to the you can mark it here. It's like this one, like this, or you can put a vertical line on the candle, and then you take it to the 15-minute chart. As you can see, at this big jump back that the price jumped up and we have a gap here, that's where the moving average of the higher time frame was touched. So this whole thing is a pullback from this point up to there. That's the pullback that we were looking. So what we're gonna do, we're gonna do the same thing again. That's what I do. Again, you can follow your own strategy rules, you can do whatever you want. That's what I do. Every time, again, the price breaks through the moving average downward, like here at this point, and it comes back up, when it touches the moving average, I sell the market at this point. It goes down, comes back up, it goes down, comes back up. So 3 points, I sell the market. You can sell it at 1 point and put your stop loss and target, and then you wait until it happens. Or you can sell it, like divide your lot size into half and enter the market twice. But I normally enter at like once at this point. Let me mark it again at this candle here. So I'll move this vertical line at this candle. Whenever this touches the moving average, I enter as a sell. The market went up 57 pips. So I'm 57 pips in drawdown. So you have to determine where your stop loss gonna be. As you can see, this high is exactly at the previous high here. So your stop loss, let's look at the previous. I put at the previous high, which is at this point, which, as you can see, this gap just reached that area. So from this point up to there is 193 pips, which I go up about 200. This is too big. How much you're gonna get back from the market? Your target's gonna be at the previous low because we are selling the market. So from this point that the price touched the moving average up to down here is 140 pips. At the top it's gonna be 200 pips. So the only, well, this time is very like a very drastic kind of a moment because the market gapped up. Probably it's been a very bad news, yeah, coming last week Friday, but normally this doesn't happen. So you have a very small touch and you can buy it, and then your stop loss gonna be very short and your target's gonna be like 2 to 1. So you have a very good reward to ratio, but this time it's very big. You know, you don't want to do this, or at least you decrease. If your stop is up there, your stop your lot size is gonna be very small. I don't know, based on your capital, and your target is down here, so you have 140 pips. As the market closes, which is this is end of the Friday, and opens on the on the Monday morning, it comes down before the London market, which is this blue line here. The market touches your target. This simple rule can make you millions. Do it again. Go to the 4-hour chart. You can see I drag this line again at this big green candle here. You can see this green candle broke the moving average upward. So we're looking at the uptrend and we're gonna buy the market in the lower time frame. Market went up, came back down, it touched the moving average here. Does it touch every time? No. Sometimes it just market rallies up and then goes and never comes back up. Never comes back to touch the moving average, just goes up and up and up. You can determine where you want to enter the market. I normally wait at least to get very close to the moving average or touches the moving average. So I'm gonna mark this candle, which is almost end of the day, and I take it to the lower time frame. This is 15th of 12, 15-minute chart. Let me do it again. If I can put it in the middle, which I cannot. So let me find that spot. Oh, here. So this area was that 4-hour chart that the price came back down as a pullback and touched the moving average. So I wait again. I wait until the price goes up. I'm looking for a buy. Remember the market, this big candle here, the market broke the moving average upward, so we're looking to buy the market. We wait until the market breaks up the moving average again, comes back down. This is a very small movement, you know, based on the highs and lows the previous time. This is very small, so we wait until it goes up, like here. It went up, came back down. At this area or the next area you can buy. So let me mark this again, this area. I drag this line. At this candle you can buy. You buy here, the market goes into drawdown, market falls, and you go to drawdown 40 pips. Your target is the previous high, 78-80 pips. So you are in 2 to 1 risk to reward ratio. You can keep it up to the previous highs, which are here, maybe this line or maybe the next line. Okay, as you can see, the market just rallied like in 2 hours and it touched this area. If you exit there, it's like 180 pips target, and then you have like a 40 pips of stop loss. follow this rule, simple rule, okay? Just have one rule in the higher time frame and then bring it down to the lower time frame. Follow the same rule, but you have to be patient to find the same spot, and then you can have very good trades. Do this at least 100 times in the history of the chart that you're trading, whatever asset that you're trading. This one is gold. Maybe you trade euro, dollar, maybe you trade pound, I don't know, whatever you trade. Maybe you don't even trade forex, whatever you trade, just go back and have a history, just like at least 100 examples, and then get a sample of how much of these 100 trades have you won, how much have you lost. So you have a kind of an average, maybe 70, 75, 85. Then you know what are the probabilities of you winning those trades. If you have 100 trades, then you can play it in the open a demo account, trade for another 100 live, so you can test your strategy and you can test yourself. Are you patient enough? Are you dedicated to follow your rules? Are you actually take the trades when the market comes back and touches the moving average or not? So you can have the best strategy in the world, but if you don't follow the rules, it's not gonna work. There's no use. So you back test it 100 times, you forward test it 100 times to see if you can follow the rules and the strategy actually works. Then you can open a real account and put some money and then start trading. And that's another whole story, because that's a real money and your own hard cash money is in line. And yeah, you go through the psychological kind of a warfare or the. So do this way. Follow one rule with one indicator. You don't need complicated systems as long as you know how to do it in a fractal way. Higher time frame, lower time frame, same rule at the top, same rule at the bottom, and then you enter and then wait. Patience is the only thing that trader needs. I hope you enjoyed this kind of analysis, fractal analysis. If you haven't subscribed and if you like my videos, do subscribe to my channel. I'm gonna release more of these videos and I'm gonna add more indicators and more systems, so hopefully you can have a better strategy for your future trades. And if you know someone who needs this, there are lots of people who need this, please share this video with them. And if you have any questions, please do ask in the comment section. I try to answer all of your questions. I hope you enjoy your trading day and I hope you learned something. I'll see you in the next video. Bye.